Welcome back to Trading Hour on CNBC TV18. On to a corporate conversation now. In the stock in focus is KFin Technologies. The stock has risen almost 40% so far in the first 2 months of the year and almost 9% in the last 1 month. Jefferies, in its recent report, has a buy call on the stock. To get a quick business update, we are now joined by Vivek Mathur, the Chief Financial Officer of KFin Technologies. Mr. Mathur, good morning. Thank you so much for joining in. I'd like to start by asking you that what are your expansion plans as of date, because you've been gaining a lot of recognition in the Southeast Asian markets. Can you share more on these expansion plans and what is the addressable market that you're looking at?
Yeah, good morning, Hormaz, and thanks for hosting. In the international market, we have been growing year by year. We started with acquisition in 2016 with only 8 clients. Today, we have 54 clients in Southeast Asia. The total addressable market in Southeast Asia is already double of the TAM in India. So while we are looking at 100 lakh crores in India in about 3 to 5 years' time, the Southeast Asia market is already sitting with that kind of a TAM. And we are rendering transfer agency services there for the last 6-7 years. But of late, because of COVID, there was lack of business development between 2020 to 21, and we reinitiated our efforts. And now we feel that there is a strong pipeline. We have a strong a pipeline of large and medium-sized AMCs. Up till now, we were having small and mid-sized AMCs whom we were servicing. And we feel that we also have that bouquet of the Exalt and Empower, the fund accounting platform, which is helping us win more clients in that market. So that market overall is witnessing a good growth. We feel that a 25% to 30% growth in international market between transfer agency and fund accounting is something that we will be able to achieve in times to come.
Mr. Mathur, hi, good morning. Good to have you on the show today. So you're clearly looking at the overseas market, Southeast Asia, very, very carefully. So I just want to understand what that can translate into numbers, because if I look at the third quarter or even the 9-month, overall revenue, so I think in 9 months, you did an overall revenue of close to 600 crores. The bulk of that is still coming from the domestic market. So just about, I think, 425 crores is domestic. International is about 61 crores. How do you see the pie shifting, say, in about a year's time? What is the revenue potential you'll target? And then talk about profitability and margins as well. I mean, will the international business fetch you as high margins as you get in India? Because, at the EBITDA line, your margins have been phenomenal. You've maintained 40% plus for a while.
Yeah, sure. So, talking about growth in the international market, we feel that it's not just about being present in Southeast Asia. It's a long gestation period to win a client in Southeast Asia because it is captive to outsourcing. We don't have competition in Southeast Asia. We are the only credible third-party outsource RTA there. And, outsourcing RTA from a captive takes time. It takes anywhere between 18 to 24 months to win a client in Southeast Asia. And we are looking at, now moving from small and medium-sized AMCs to large AMCs. A couple of large AMCs can really give a bump up of anywhere between 30 to 50% of the revenue. So overall revenue, while it was 600 crores for 9 months ended December, we feel that, currently domestic mutual fund is just 64% fee-based revenue for us, and 6% is value-added services based fee. So 70% of our total revenue from mutual fund will come down to in the range of about 55% in 3 to 5 years' time. So we don't, give surprises or expect surprises that in 1 year we'll be able to do a sudden reduction in domestic mutual fund business and growth in international business. It's a journey that we have undertaken, and we are going to grow beyond Southeast Asia. We are now looking at getting into, setting up shop in Thailand, in Singapore. In terms of our own legal entities, we are in the process of taking necessary approvals. We study the market. We are looking at beyond into Europe and US. So we feel that the growth in revenue will be in the range of about 20%. The EBITDA margins will continue to remain in the range of 40 to 45%. If we stop investing for future, then the margins can easily go up in the range of 50%. But I think it is important to deploy shareholders' money to create future moats. And that's why we are working on in terms of product expansion, in terms of geographical expansion. We are actively looking at, even M&As to grow the business inorganically. both in India and out.
Okay. Just to understand, you're saying 20% top line growth, margin steady state 40 to 45%. Can you give a little more color on the M&A strategy that you're willing to consider? Is it going to be internal accruals? What's the cash that you have? What are the kind of target companies you could look at, and what could their size be?
Yeah, so we are sitting with cash and cash equivalents of about 325 crores now. And, so far our acquisitions were small. We are looking at, in terms of acquisitions, which may be bigger in size than our past acquisitions. We have a history of successful M&As in the past. And we feel that, as a completely delivered company, we don't have any debt on the books. With a combination of equity and debt, we should be in a position to look at overseas acquisitions and domestic acquisitions. It may take anywhere between 6 to 9 months to finalize the target. We are actively in discussion with a couple of targets outside India. We have actually let go of, a couple of targets because the valuation ask was too high, and we don't feel that it is appropriate to just buy a company and then expect a turnaround. So we will go for targets which are specifically value generating for the company and the shareholders. And accordingly, we will finalize our approach in most likely in the next 6 months.
All right, Mr. Mathur, thank you so much for joining in, and wish you good luck for your expansion plans and for the next financial year as well. That was the management of KFin Technologies. Has had a good start to the year, as almost up 40% as we highlighted earlier as well. The management there sharing some bullish commentary on the expansion plans going forward as well. By the way, there's some flashes on your screen there.